Anyway, thanks for joining us, folks, and appreciate, obviously, we're trying to catch up a little bit on the program and also not bunch every secondary exchange into the same hour. But my name is Brian Korn. I'm a partner at Manat Phelps in New York. We specialize in crowdfunding, marketplace lending, early stage securities, fundraising and capital raising, venture funds and venture investing. And it's been my privilege to be on the board of CFPA for the past 3 years. The organization truly does a lot of remarkable things, especially in the area of member engagement and education. The summit is one of the highlights that we have on the yearly calendar, and it's great to see everybody make it out here. So with me, we're going to talk a little bit about, okay, you bought it in a Reg A deal, you bought into a Reg CF deal. What do you do with it, right? It's not Disney stock. You can't call your broker. You can't E-Trade and be done and clear the whole thing out in 5 seconds. What is the risk of that? Is there a real market? Will a real market develop? And do investors understand that when they buy these? And that's really a lot of the concern that we have. So we're very fortunate to have Jason Paltrowitz from OTC Markets. I'll let Jason say a little bit about himself and a little bit about OTC. And for those who don't know what OTC is or think they know what OTC is, I know when I started talking to you, it's a lot different than what my perception was when I was working at a bank. So go ahead.
So thank you, and thank you all, and it's a privilege to be here. To kind of be the headliner from the exchange panels. So hello to my friends from NASDAQ and New York as well. My name is Jason Paltrowitz, as was already said. I'm the Executive Vice President, Head of Global Business Development. I wear many hats. We're a small company. I also co-run our corporate development and investor relations side of the business. For those of you that don't know, think of us, I guess, as the baby exchange. We operate a market on which over 10,000 securities are quoted and traded every day, from some of the largest global brands that choose to use us for their secondary listing venue, names like Roche and Heineken and BASF, all the way down to we operate a venture market for early stage growth and developing companies. In fact, today we quoted Overstock's Preferred B, Fannie and Freddie, and any number of early stage growth companies. We were also privileged and honored to be the secondary market choice for the first Reg A plus deal that closed, Elio Motors. So Elio did their what we'll call mini IPO or small IPO on our market just over a year ago.
Absolutely, and congratulations for that. So many of you know, to be listed on a NASDAQ or NYSE, you have to be what we call a Section 12 company with the SEC. That is not the case with OTC. Can you sort of highlight the different tiers of markets that you do have and what a company's basic requirements are to be listed on each?
Right. So just to be clear, we're not an exchange per the definition, and I just want to make that clear. So New York and NASDAQ are what you call national stock exchanges. We operate what's called an ATS, an alternative trading system. We are SEC regulated. We're a Reg SCI entity. But because we're not an exchange, we offer a tremendous amount of opportunity for small and early stage companies because they don't have to meet all of the requirements of an exchange. The exchanges have a specific set of rules and requirements that one has to go through to be listed there, and there are certainly some benefits to that if you're the right type of company. But not being subject to all of those rules and restrictions gives some of the early stage companies a platform on which to have a secondary market, to have a public quote, to be traded, but they can do so availing themselves of a number of different standards that we put in place to allow them to be public. So for instance, we have a very large community bank franchise where we'll allow banks to have a public market, but we allow them to use their community bank disclosure as the means through which they're making their information available. On the international side, we allow them to use their home market disclosure. And on the small business side, you can be an SEC filer without having to be subject to all of the other requirements of being on an exchange. So it's a much more cost-effective, easy, less complex path to having a public market and secondary trading. From a Reg A Plus perspective, we allow companies to use their Reg A Plus standard. So again, not having to meet a lot of the Sarbanes-Oxley requirements or the onerous corporate, some of the corporate governance requirements, such as having a compensation committee. That's something that we would say if you're a sub 250 million market cap company, you should be thinking about maybe running your business. Having to deal with things like compensation committee might be a little onerous in the space. So it's a little bit of an easier path to having that public market.
Got it. And just for scale purposes, how many new listings do you see each year on average? And what's the rough breakdown between Reg A, non-Reg A organic listings, and possibly people who are ex-NASDAQ, companies that are ex-NASDAQ or NYSE?
So we operate two what we'll call premium markets, our OTCQB, which is our venture market, and our OTCQX market, which is where Elio trades. That's higher financial standards, some lighter touch corporate governance standards. So if you look at those two markets as what we'll call listings markets, quote unquote, we probably have anywhere from 10 to 15 securities a month that go to the QX market. We're averaging about 40 a month on our QB market. So take that 40, 50, 60, right? 60 companies a month, all coming from various different parts of kind of the universe, right? Whether it's a community bank, whether it's an early stage growth startup, if you will. We do get a number of international companies, again, having their cross-listing. One of our biggest markets is actually Canada. So Canadian companies that are looking to have that US presence in North America will choose us as their secondary market. Again, they're allowed to use their Canadian disclosure, so it's not duplicative and onerous. From a Reg A Plus perspective, which is, I guess, why we're here, and this gets to kind of the crux of a lot of what we talked about today, there's really only been one. There's been a number of Reg A Plus deals, if you will, or things that have closed and money raised. But in terms of pure kind of slow PO or immediately going onto a secondary exchange, Elio has been the one, right? That's been the flag bearer for over a year now. We have a number in the pipeline that are waiting to close. What's an interesting conversation to have, and what I've learned from being here this morning, is how much is not known really about Reg A Plus post-closing. So we've had a lot of people say, well, we're not going to go public, or there's no public market, or there's no place to go public. What's interesting, and what we should all remember, is the thing with Reg A Plus is that once your deal closes, those shares are immediately freely tradable. And a lot of people don't know what that means. Immediately freely tradable means that anybody who has bought into a Reg A Plus deal, including Legion M we heard this morning, or Crowd, I don't remember who the other one was. Fundraise. Anybody that owns that security can go to their broker and can say, sell that security for me. And that broker then goes to FINRA and gets a ticker symbol. And all of a sudden, you're a public company. We'll call that a slow PO. And those shares trade. And they trade in what's called the pink market. And so there's things that you have to think about when you're issuing freely tradable shares. You're trying to make it like a Reg D, but there is that element of the fact that all it takes is one of your investors to want to sell it, and you are in effect a public company, and there's some risk and things that go along with that. So we actually spend a lot of time, my team and I, crisscrossing the country trying to make that very clear. It doesn't mean that you have to do something, but it's something that you have to keep in the back of your head, that you don't control your destiny sometimes once you've issued a Reg A Plus security, and you should manage that a little bit and understand it and know what it means, and talk to some good advisors as to what you can do to mitigate that. So being on a market like QX or QB versus pink, and thinking about how you're going to interact with your shareholders if that does happen.
So if I buy a Reg A security and I have an account, have you worked out the kinks of the infrastructure in the back office? can major market makers and major brokerage houses buy Reg A securities now? Can I execute a trade on OTC through a Schwab or a Morgan Stanley account?
Yeah, and Elio was a great, I guess the only, right? But it, taught us a lot. So there's a lot of chatter around, you can't clear these things, or it's tough for a broker dealer to take the securities. That really is more a function of the company and what the company has done on the back end to prepare for what I've just talked about, being a public company. Things like DTC eligibility, things like not issuing certificates. These are industry issues. These touch all of the exchanges. Couple that with, I think we've touched on it, the kind of disconnect between SEC and FINRA, which I think we're all aware of, has kind of made that process tricky. Elio did it, and it worked pretty well. There were some issues at the beginning, and that was more a function of broker-dealers not understanding what Reg A was for the first one. They had a great transfer agent who worked through that process with them, and ultimately, after a couple of days, those shares were all deposited, all the brokerage firms were able to take it, and those shares trade freely now, under the symbol ELIO, if anybody's interested. So it works if you do it right. If you think you're just going to kind of do this thing and close it and maybe issue physical certificates or not make it DTC eligible or not have your transfer agent do the things that are necessary to allow the shares to freely move, then you're going to run into trouble irrespective of
Right.
where you list, how you list, what you list.
And they can still be traded on other secondary markets somewhere.
Yeah, people are setting up some secondary markets. But I would say, when you're doing a Reg A Plus, the advantage of having freely tradable shares is to have a market, right? And what do investors want? They want to see a public price. They want to know they can exit. And you should be thinking about this concept that I'll issue shares and I'll stick them somewhere, and maybe, if you want to buy it, call me and I'll find somebody to sell them to you. Or somebody said eBay this morning, which I thought was interesting. That's not necessarily why you do this or why you should do this. And certainly investors, no matter what they're investing in, want to see a public price in a public market and want to know that they can get out as easily as they can get in. So I think it's incumbent upon all issuers to be thinking about that, right? That T+1, if you will, that day after you close. What's the investor experience, and what should I do as a good corporate citizen, as a public issuer now, to prepare for that?
And that's really important, because a lot of the value that's derived from owning a share in a company that's listed on OTC or another exchange is the liquidity factor and the value of being able to get out and at what price. And if you go and you look up a quote, and the last time it traded was April 8th, and the bid and ask spreads are $5 apart, then it's basically a stuck market. This is my last question, then I'll open it up. What do you do to sort of ensure that there is a trade, there is a bid for every security that's up on the exchange?
Right. This is a very long conversation. This gets into benefits of dealer markets or exchanges and how the infrastructure of markets work. Ultimately, there are two things I think everybody needs to. Liquidity and volume are two very different things. Liquidity is the ability to know that if you wanted to sell or buy, somebody's there. So our market as an ATS is a dealer market, kind of what NASDAQ was before it became an exchange, for those of you that remember, right? An interdealer quotation system, or broker-dealers coming together electronically to make markets. So when you're on our market, you have, in essence, market makers that are pulling public quotes out into the public space, and you can go and see those quotes. You can see Knight and Citadel and all of the big market makers up there making a quote, and you can see what the bid ask is, and you know that there is liquidity, right? You know there is somebody standing there at the ready to transact on your behalf. What you might not see is volume, and volume a lot of times is a function of the company, right? If you're only issuing, Elio's a great example. Elio issued $17 million, 6,600 shareholders. Most of those shareholders were not in your traditional IPO, that institution that just wanted to flip it, right? Most of their shareholders were people that believed in the Elio mission, and so are holding this thing because they believe in what Paul Elio is doing. And so it doesn't make sense to assume that you're going to see 1 million shares trading every day when there aren't that many in circulation anyway, and the people that have it are holding it. but it trades whatever it trades, and the investors know that if they wanted to sell it and if they wanted to buy it, they can. There is a public market, a very public market with FINRA regulated broker-dealers standing ready to execute should somebody want to buy or sell.
Right. And that the Reg A purchase is not necessarily a complete dead end, which is what we heard this morning about, or what do you do if it's an emergency situation? Can somebody get out?
Right, and again, any of those investors, and somebody asks, what do I as an investor, what can I do? You take it to your broker. Schwab, E-Trade, Ameritrade, all of these guys trade on our markets, and they'll take your security and they will put a public, they'll get a ticker symbol, you'll get a ticker symbol, they'll put a public quote up by filing what's called a Form 15C211 with FINRA, and once it's cleared by FINRA, you will have a public market, and that investor will have the ability to transact those shares and sell them in the public market.
Great. We have a couple minutes if anyone has any questions.
Wow.
So two questions I had, then we'll close out. Number one is talk a little bit about cost and fees versus going it alone versus the other exchanges if possible. And then, what are sort of the big lessons learned if you were going to give somebody a big takeaway from this discussion just from doing one or two transactions?
I'll let the other exchanges quote their listing fees. Our listing fee for our top market's $20,000. For our QB market, it's $10,000 per year. So not overly expensive in the grand scheme of things. Really, most of the expense of anything is not exchange listing fees for any of us sitting in the audience. It's all the other stuff that you got to do around it, the accountants, the lawyers. The SEC recently put out a study that said to go on a national exchange, the average cost in year one is about $2.5 million, and that's all the other stuff, not the listing fees. And the ongoing is about $1.5 million. Certainly,
so code of ethics, audit committee, nominee committee.
What we like to call
hotline.
the expensive experts you have to keep yourself from getting arrested or other things.
Okay. Brian's a lot cheaper than that.
I'm sorry?
Brian's a lot cheaper.
That's right.
Yeah, exactly.
I would do it for half.
Obviously, with our markets, you don't have to do a lot of that stuff, so the price comes down considerably. When you're talking about Reg A Plus versus a traditional IPO, of course, then you're even talking even less. So the Elio numbers are public, what they spent all in. I think it was less than $500,000 all in on all the stuff that they did. So certainly Reg A Plus versus a traditional IPO is going to be less expensive.
And then the biggest takeaway for investors looking at these deals?
I guess the two takeaways we see, I'll give two, and the first I touched on. Really think about your secondary market. Reg A Plus, yes, it's an easy way to raise capital, but the crux is you can raise capital, the shares are immediately freely tradable, and you've got blue sky preemption on the offering. And otherwise you're doing a private placement, right? So you have to think about that once you've got the money, what you're going to do. Because if you don't think about it, somebody else is going to make that determination for you, and you should manage that. The second takeaway is you really need to surround, and somebody else said it, you really need to surround yourself with people that know what they're doing. Especially in the small cap space. There are a lot of people that prey on unknowing CEOs and CFOs and guys that have great ideas and love their company and want to grow a business but have no idea about the capital markets. And I can sit here for hours and tell you about companies that needed to raise money and that were surrounded by bad bankers, bad lawyers, bad advisors, where they've wound up doing death spiral financings, convertibles, where all of a sudden the company's just fallen off the radar through the CEO meant well, but he needed money and got bad financing. Surround yourself with good people. That's the other thing. Just because somebody says they've done a crowdfund deal, somebody says they're a Reg A Plus expert, doesn't necessarily mean they are. This is a great forum to meet people that are experts and really pick their brain. That would be the other thing. There's been a lot of deals that haven't worked. Some of that might be a function of the company and whether or not it was the right company for crowdfunding per se. Some of it might just be that there was some bad advice given. And I think it's important to really make sure you're getting the best advice as you kind of go through this stage.
Good. Very important. You had a question?
I do. I have a question about the ATS.
Mm-hmm.
Okay. Check. There you go.
So you're an ATS, and that's been talked about across the country as another strategy by which the intrastate laws and shares might be traded or sold. Do you have any thoughts on that? There's even been an idea of a nonprofit ATS for that. What do you know about that?
What do I know is that we are one, obviously. Certainly, they're much easier to create, if you will, right? So the restrictions, the requirements to set up an ATS are a little bit different. They're regulated differently. You know, our belief, and we spend a lot of time with the regulators, is that when it comes to you know, early stage market, growth markets, being efficient in venture movement of shares, ATSs tend to be more agile, more easy to kind of work through the system. So the rules and the regs make it such that if you're really looking to create venture markets and venture exchanges and move capital in small cap companies, the ATSs are the innovators in that space. And we've certainly seen it, and I think you know, something to be considered.
But nobody
we
would
hear
think-
about it.
Nobody would say, oh, OTC, they're an ATS, not an exchange. Most people think of you as there's a quote, there's a listing, I can go on Google Finance and put in a ticker, and it punches up the same way that a New York listed security punches.
Yeah, I mean, ultimately, from the back end, right, as from the guy who goes to Schwab and types in a ticker symbol and says buy 100, you don't know the difference.
Right, but if you but some of these like Fundrise, for example, if they were to set up a secondary, they would probably do it on their own system. That would be basically a closed network with no price discovery.
Yes,
no.
so that's where you run into some of that. Obviously, we're the largest ATS. We're a Reg SCI entity. We're systemically significant financial market. We are the center point. Again, it's 10,000 securities, all the over-the-counter equity market, and that's us. So any other small ATS would probably be a closed market, but still a market on which innovation and technology would serve to allow for the free movement or the secondary trading of those shares.
All right, thanks everyone for their attention, and I think we're moving on to the next panel. Here's Darren.